everybody's got different, risk tolerances and different aspects, that different places they're at in their life. So we always recommend that people speak with an advisor.
Yeah.
Yeah. I mean, I'm going to play dumb here a little bit. I mean, when's the last time a new asset class came along? An advisor had to talk to somebody about it.
150 years ago. Oil.
Right. Welcome to a Wiser Retirement Podcast, where we believe the best financial advice should always be conflict-free. I'm your host, Casey Smith. Guiding you to financial freedom today are my two co-hosts, Robert Swarthout, founder and CEO, portfolio manager at Teton Crypto Capital, and Don Friedman, back again, president of DACFP, which is Digital Assets Council of Financial Professionals. And guys, we have a lot to cover because it's been a little while since we dropped a crypto edition of A Wiser Retirement, and a lot has happened. Were you here before SBF went to jail, or is that after?
Well, I was here before he went to jail, but I was here.
But the news had already broke.
Yeah, so I actually did a little research. So when I was here, which was in April, Bitcoin was at 28,000.
Okay.
And now fast forward to today, Bitcoin is at roughly 38,000. So you're looking at a 35%.
So we should thank
return.
You for that. Thanks, Don.
Yeah, happy to help any way I can. Bye.
Robert, how's the fun going?
Going good. It helps when things are up. I've started really thinking about like what this next bull market might look like. It seems like it's going to be largely still FOMO driven. Not much utility. There's some utility, but nothing of consequence. So just trying to understand how you might handle trading in and out of a position, and just going back and really modeling like what the last cycles or previous cycles have looked like to kind of,
And your fund focus is really more. It's not the stuff that everyone's reading about every day. It's more the industrial usage of
commercial use cases. So it's trade finance, supply chain management, cross border payments.
Crypto with a purpose.
Crypto with a purpose. That's a great way to say it. There's certainly been some of the 16 things that the fund holds. I think 3 or 4 of them have had trials or real world use cases this year. A lot of things are being worked on, and it's just slow. When you're building a new industry, it's a lot of pipes need to be laid. So
yeah. Well, today I want to focus about all these spot ETF applications that have been applied for. Everyone seems to think that there's going to be a Bitcoin ETF soon because BlackRock applied.
They did.
And if BlackRock applied,
there's something like 574 times they've applied, and they've got it 573 times.
Yes, that's correct.
They get it. Yeah.
Yeah.
They don't maybe necessarily get it immediately. And I think that's really probably what the discussion's about is, it's coming, but like maybe when is it coming?
I mean, a lot of folks have their eyes on January 10th because that's when the SEC has to make a decision on the ARC ETF.
Yes.
So sometime between now and then.
But did all this get triggered because of the Grayscale lawsuit? Was that?
Well, I mean, there's been kind of 3 main events. One is, as you said, the BlackRock filing was big. The second one was how the judge came down in the appeal for Grayscale in their favor, saying that the SEC was arbitrary and capricious. Mm-hmm. And then the third big piece is, as Robert and I were talking about, which is upcoming, is the Bitcoin halving, which is April, May. And for those folks that don't know what that is, as a miner, you validate the transactions, and it's like football fields of computers racing to see who wins. And the winner right now, I think it's 6.5 Bitcoin. I think it is
every block, and I forget, a block is every 10 minutes.
Yeah,
something like that.
And then it gets cut in half in April, May.
Yeah, so roughly every 4 years, it cuts in half again, then a half again, and a half again.
Right.
In perpetuity, until the year 2140. So
basically,
or it's 6.25, I think.
Is
now,
that the
it'll go to
validation
3 1/8.
that the validation of transactions that you're talking about?
you're validating transactions, and you're also basically mining new Bitcoin, right? Like,
so basically they're getting paid less, so they have to mine faster.
well, it is an arms race for sure.
Yeah.
But it's just the thinking is, if the miners are going to get half as much for doing the same work, they want to see the price, or they demand the price to be higher, because they won't sell the stuff that they're mining into the market.
Got it.
And therefore double the price if you're cutting the reward in half.
Okay.
So that's in the April-May timeframe.
So like purely supply demand kind of.
And that's the other thing, to your point, exactly. There's limited supply. Yeah. So that also pushes prices up. The other thing is that I don't know how many people are aware of, but since the birth of Bitcoin, and again, past performance is no guarantee of future returns, it moves in these 4-year cycles. So it's 3 up, 1 down. So 2022 was the 1 down, which means the new 4-year cycle started 2023, the year that we're in, and it's the best performing asset class this year. It's up over 100%. So hopefully it does another 3 up, 1 down. But again, past performance is no guarantee.
Yeah, it's,
Yeah.
And it could be a little bit of sideways up too for the first couple of that 3-year cycle.
But how do you correlate that with just throw that to the S&P 500? The S&P 500 has also been 3 up, 1 down.
Well,
right?
The way that I think about it is crypto as a whole has never had to deal with a recession in the stock market. I mean, because it was birthed in one in 2009, 10.
Yeah.
And then the market was up for 10 years. I mean, yes, there was
mostly.
So it's like, how is the current political environment coupled with, are we in recession, are we not, whatever it is, and then you have this. So I don't know, it's intriguing.
Yeah, and within that, I'm not an economist or anything, but it's the risk on, risk off. Mm-hmm. I mean, you're raising interest rate. I mean, everything was down in 2022. Mm-hmm. Interest rates go up. Is it? That's the risk off, and they're saying we're plateauing, and if interest rates go down, that's another, bullish sign for something like Bitcoin.
So there's 12 of these applications, and there's 4 or 5 of them. They're kind of bunched together. Mm-hmm. BlackRock being one of them. They kind of kicked that can in January, a couple weeks ago, where they basically said it's not happening. Yesterday, the SEC opened the comment period a month early on the Franklin Templeton application, which was interesting because the SEC does nothing early.
Right.
So, it almost feels like they're trying to get all the ducks in line so they can get everybody out the door at the same time.
Right.
In an attempt not to be a kingmaker, is at least the theory that I've probably subscribed to. When that happens, we'll see. But January the 10th is the date that.
So if they achieve, I have a list: BlackRock, Wisdom Tree, people I've never even heard of. We all heard of ARK, but Van Eck, Fidelity,
Bitwise,
Global
Franklin
X,
Templeton.
Who's
Hashdex?
Who's Valkyrie?
Yeah,
Valkyrie Investments.
Yeah, so we're actually upon assuming that at some point there's an approval, we actually have lined up. Rick is interviewing 6 of the 12, which will be pretty cool because he's basically going to go right into the studio and interview those 6, and then we're going to release them once a day because he has a daily podcast. So each one will be interviewed for 15 minutes. So we're super excited about that. That'll be pretty cool.
And where is that show?
So our sister company is called The Truth About Your Future. So TAYF.com. And he does a Monday through Friday podcast, Monday through Thursdays, 3 to 10 minutes, focuses on longevity, health and retirement, retirement security, exponential technologies, and blockchain digital assets. So when this happens, he's going to we'll have 6 days because right now we have 6 of the applicants who want to be on this interview, and we'll do a 15-minute interview with each one of them. So
is Larry Fink one of them?
I'm not sure if I'm allowed to say who the 6 are. You'll have to tune in.
Yeah.
That would be a rock star interview.
Yeah.
Because Larry Fink basically said that Bitcoin was an index to money laundering.
But
then he followed it up with Bitcoin is the future, effectively.
Exactly. So he sees the light.
He's using the Jamie Dimon playbook when it comes to crypto.
Right.
Talk bad about it, and then all of a sudden you like it the next day.
Talk bad about it. Put everyone out of
millions
business.
and millions of dollars in bond transactions.
Yes.
All right.
So
Interesting. So, all right. So this gets approved. I mean, Don, you work with lots of financial advisors. How many are telling you, I'm staying on the sidelines until the ETF's approved, then we're in?
Right. So we actually have statistics on that because we've done surveys. So presently, 12% of advisors are recommending Bitcoin to clients.
Currently,
Yes. In the event that a spot Bitcoin ETF does get approved, 77% are going to say that they're going to recommend this spot Bitcoin ETF to their clients. So
probably at the 1% rate that everyone talks about.
So that gets to the next thing is people are asking like, how does that, how do you think that impacts flows? So Rick is a believer in a 1% allocation. There's folks out there that are anywhere between 1 and 3%. So if you just take the RIA world, which manages $8 trillion in client assets, if 77% of them recommend it at a 2% allocation, that's $150 billion in flows. That's what we feel the potential is, over the next, I don't know, 2, 3, 4 years. But that's a pretty significant number.
So I want to get technical here for a second. I mean, I grew up with you in the ETF launching, right? So the first thing I go to is if you have 12, let's say 6 get approved. You have 6 ETFs, all buying Bitcoin. You'd have to have a nasty spread at that beginning of the opening of those trades, I would think, because they're all actually buying Bitcoin, correct?
yes, they have to physically own it and settle it. It's not paper Bitcoin. It's real Bitcoin. Yeah.
So who's going to be the AP behind that? Is it going to be different APs? These are your authorized participants. These
I know what you're
referring to. Well, the listeners may not know, but basically, you buy something, the ETF company has to have someone else basically help fulfill and create the ETF wrapper, right?
Creation redemption.
Correct. So in this world, it's not like a Knight or anybody like that. It's like, who was it for BlackRock? BNY, is that right? BNY Mellon.
Yeah, I mean, there's, if I'm understanding your question correctly, there's certainly, I guess I call them rumors, that many of these players have already been accumulating. So they have the Bitcoin to sell. I mean, it's a bit of a trade for them, right? Like,
that's true. And BlackRock could buy that, and
yeah,
you
would never know.
Yeah.
Lately there's been more anonymous on-chain stuff happening with Bitcoin, with the accumulation of wallets that are of size. Like, there's one wallet that is now holding 7% of Bitcoin. They have no idea who it is. A month ago, it had 0.
Wow.
So, I think that
probably BlackRock, because they know exactly when this stuff's going to get approved. They're all in the White House. All these guys are in the White House.
Yeah. So at the end of the day, it's not like all these, these 12 different applications are opening their Coinbase account and buying Bitcoin off of Coinbase.
You think that's part of the application process to say we have X amount to be able to create a stable? Well,
they
ETF?
provide their custodians.
The custodian. I mean, if it wasn't part of the application, that would be public, wouldn't it be?
Yeah, I guess so.
And I'm sure that would be making the news.
Yeah,
because there's no news that I've seen that says BlackRock or whatever applicant says they own Bitcoin currently.
I just see it as, I think a lot of people will be buying this, and I just wonder how orderly the initial week one is going to be. That's just very interesting to me.
Crypto is typically not orderly. I mean, it's drastic in both directions.
Yeah,
like when there's actual liquidity.
But that's also the purpose of the AP, is to make it an orderly market and keep spreads very, very narrow.
Which would make sense on why you'd have to be accumulating it ahead of time with the anticipation of what demand could be.
Right.
Yeah. I don't know. I just, and we can talk about, well, I'll shift gears just a minute. Just because there's an SEC sanctioned ETF to buy spot coin or buy a Bitcoin through a spot ETF, how does that change regulation?
Well, it doesn't change regulation.
I mean, is crypto still kind of like the Wild Wild West in that we don't have official crypto regulation in the United States right now, even though we could have an ETF next year?
So a couple things here. The law of the land according to the courts, XRP is not a security. Bitcoin has never been tried, but it's basically decided it. Everyone
They left it
agrees.
alone.
They left it alone. There's largely because there's no one to go sue in Bitcoin.
Right.
Which
is genius.
Right. So that's a commodity. I mean, it's easy. At least under current definitions. If we got regulations, they redefine what it is. Maybe it becomes something that's crypto related. But the regulations are still murky. I mean, for the foreseeable future, the courts are the path to any sort of clarity, and that's going to be one-offs, expensive and slow.
I was about to say, and you can probably win it, but it's going to cost you $200+ million, as we've already seen.
Yeah, in 3 years.
Yeah.
So, and most people don't have that much patience or time, or patience or money.
So maybe the safer bet here is the fact that it's Bitcoin that we're talking about, and we're not trying to put Dogecoin into an ETF.
Right. The other thing, though, is once it's approved by the SEC, then the ETF is a security. Correct. And it can be in the largest place that people have money is in their 401ks and their retirement accounts. So it could obviously be in your brokerage account, but also in a 401k. So that's why it's being looked upon as like the Holy Grail, that once it's blessed by the SEC, then it's game on. And then you have the wirehouses who will take a look at it, and once it hits 100 million, which is usually their benchmark, they usually go 100 million 3-year track record, but I think in this case it's going to be 100 million. And now suddenly it's available on the Morgan Stanleys and
right,
the other
it should be 100 million overnight.
Merrill Lynch.
Right.
Oh, easily.
Yeah.
But what I'm saying is, like, it's per product. So for example,
true.
if it's the Bitwise one, if it accumulates 100 million, that one will be able to go on the platform.
Yeah.
If it's one that has 5 million, 10 million, that's not going to make it onto the platform.
No.
So,
I like a Van Eck, Invesco. Those are companies that typically have smaller holdings.
We'll see.
So.
Yeah.
It's also, there's also a couple ETF issuers who have applied for Ethereum ETFs. So
correct.
Bitcoin is just the
BlackRock
on-ramp.
is one of them.
Yeah. So that's just the on-ramp. I mean, this could open up into lots of different coins, and there's also picks and shovels ETFs that are out there right now. Mm-hmm. So this is just the beginning.
Yeah, the Ethereum ones I find intriguing because the SEC has been very clear that they're not willing to say it's not a security, but they won't say what it is.
Right.
But the same organization that you're filing with to get an ETF. So it's that one. I'm not going to say BlackRock's going to lose that one. I think that one will take some time. Right. It intrigues me that BlackRock went that route because they know they likely could get clarity with an XRP one. Or they could get that approved because the courts have said that even though the SEC doesn't like that decision because they lost. I don't know. It's just some interesting world we live in with this SEC when it comes to crypto.
So what do you tell someone who thinks, oh, this Bitcoin stuff, I don't understand it. I don't know. I can't pay. I don't understand the purpose of it. I mean, you're going to get pushback from a lot of clients. There's no way that there's financial advisors that are just throwing this into a portfolio without a conversation with a client.
So there's a couple answers. One, to tout ourselves, we have an online self-study course, which is you get certified in blockchain and digital assets. So it's a phenomenal way to get educated on the space. And it's 5 different tracks. So it's designed from anybody from a financial advisor to a crypto industry person to, we have a consumer track. We also have an ex-US track. So whether you're an advisor or a consumer, I think to your point, you got to get educated on this. It's super important to know what you're investing in. We obviously encourage people to use financial advisors. I mean, that's your fiduciary, and they should be looking out for everything that you're invested in your whole life insurance, et cetera.
Yeah.
So we would encourage people to take the course. You could literally get through it in a weekend if you wanted to.
Okay. We'll put that in our links.
Yeah. The other thing is, if you believe in modern portfolio theory, you believe in a diversified portfolio. So having something uncorrelated, which is most of the time the case in Bitcoin, actually diminishes the volatility of the overall portfolio and increases the likelihood of long-term positive results.
Yeah. I mean, I'm sure you guys have already done this, I know, but when when I was showing our asset manager here, I was like, if you used 1%,
Right.
in it at the time we did this, people were talking about going to 400,000. Now people are talking about it going to $1 million, right? But
Be very clear, Kathy's saying that.
true. At ARC.
Yeah.
But if it went to 400,000, man, you add so much rate of return to the portfolio, even with 1%. But if it goes to zero, it doesn't really affect you that much.
Yeah.
And so that is a very safe number. I think 3 to 5%. I saw someone say 5 to 10 recently on a Kitsy's podcast.
Yeah.
And I was like, woo.
And Rick he's done presentations where he takes, if you had $100 over a 10-year period with an average annualized return of 7%, 60-40 portfolio, he shows what happens to the 60-40 portfolio with this annualized 7% return versus a 1, 2, and 3% allocation to Bitcoin, and have it come out of the equity sleeve. So you're at 59, 41, 40 and 1, not 41.
Right.
And he shows what happens if Bitcoin goes to zero versus on the upside if it goes as high as Kathy Wood's prediction of $1 million. And it's super interesting. It's like de minimis. It's nothing like if it goes to zero and you can see the outsized returns. Excuse me. If it goes that high, we're in process of updating that and creating an infographic on our website, which shows how the actual performance has been, and you'll be able to see that.
That's cool.
Yeah. Lately when I've been talking to people, like, I don't even talk about price. It's purely like, they're asked, why would I buy Bitcoin? Why would I buy crypto? I'm like, okay, let's rewind. It's 1995. No one knows what the internet's good for, right? I mean, it's a bunch of chat rooms.
Right.
If you wanted to
got mail.
You're right, exactly. And the disc, you just get a disc every day in the mail. I was like, I used that analogy, and I'm like, you know what? You can do a 1 or 2 small allocation. Like, if you're not investing in crypto, you're betting against it becoming something. And I was like, at this point, to me, that's a foregone conclusion. It is going to be something, but obviously I'm convicted about it.
Yeah.
You just got to choose what side of the fence you want to be on there. So,
and overlay a chart of the first 10 years of Bitcoin versus Amazon. It's like eerily similar.
Yeah.
Interesting.
I mean, look at something as recent as 2022. Like, all the markets got smacked.
Yeah.
I don't think advisors were saying, run for the hills, get out of NASDAQ or get out of the S&P 500. It's the same thing. Dollar cost average, rebalance. That's the name of the game.
Yeah, I think most of the podcasts that I've listened to, advisors who are definitely on the forefront of this, has been people already have cryptos, and they're coming to the advisor going, well, what do I do with these cryptos? And so the advisors are able to capture those inside, like Orion. They can sync it into their portfolio where they see it on the sheet just like they would anything else.
It's more than that.
And then they can have their trading strategy if they want, but a lot of them just seem to be at least holding the asset.
Yeah, I mean, it's more than that. We do a whole presentation on how to grow your practice by hating Bitcoin. So 22% of Americans own Bitcoin. Hot wallet, cold wallet. What exchange did you buy it on? How did you register it? Is it in your will?
Yeah,
like
that was
all
a
of
whole
these
thing.
questions that like has nothing to do with recommending it.
Yeah.
It's in your will, or, I was talking with a good friend yesterday about crypto, and was saying how the courts haven't really had to deal with crypto in like divorces or like,
we cover it.
I mean, there's a lot of stuff to be figured out that, regulations would help if Congress actually did their job.
We have a whole thing in our course about like exactly that, divorce. People used to, hide gold and diamonds. Now they're hiding crypto and like language that you should have in your will and stuff, and addressing it as it relates to divorce, all in our course.
That's great.
Cool.
So we launched an ETF. Do you think advisors just start throwing it into the portfolio, or do you think it's a conversation that you have to have with clients before you put 1% into a Bitcoin ETF? Because it's fiduciaries with discretionary authority,
Right.
technically, right?
I'm not an advisor, but we suggest that an advisor talk to their clients.
People need to
because
opt in.
Everybody's got different, risk tolerances and different aspects, that different places they're at in their life. So we always recommend that people speak with an advisor.
Yeah.
Yeah. I mean, I'm going to play dumb here a little bit. I mean, when's the last time a new asset class came along and an advisor had to talk to somebody about it?
150 years ago. Oil.
Right.
So I don't think anyone is rehearsed in this.
Yeah.
So conversations, communication's always.
But although, again, in our course, we talk about overcoming the most common client objections. So,
Which are what?
You got to take the course.
Are you curious why annuities keep coming up as a potential investment option? People are often told that annuities can effectively mitigate investment risks and help secure their financial future. However, annuities often benefit the salesperson and might not be the best choice for you as a consumer. To learn more about the various types of annuities, the negatives of owning them, and better investment alternatives, we have a free ebook on our website just for you. To download our ebook, Buyer Beware, Why Do They Keep Trying to Sell You That Annuity? Simply click the link in the episode notes or visit wiserinvestor.com/guides. Now let's get back to the episode.
It has to be lack of understanding of just what.
I mean, there's a lot of
exactly it
things.
is,
I think
but-
there's like 15 in total that we have in it.
It's, I often find that people are curious. They've heard about it, at a minimum, but they're like, oh, that's way too complex for me. And I'm like, you don't have to understand how Ford makes vehicles. You don't have to understand how Amazon ships packages
Right.
to own something. So it's just, it's the
They
fear of the technology.
They can touch it though. They can see
Sure.
it. They don't understand what the purpose of it is. That's the hard part that people have with it is like, well, what's it for? What does it do? Is it, some people think that it's like a doomsday thing. Oh yeah. If the world collapses, I have this Bitcoin.
As long as the internet's still working.
Right.
We say it's just software. And from an advisor perspective, the beauty of it is there's so few advisors that are educated on it that it's a phenomenal marketing opportunity for an advisor if you're able to talk about it.
Right.
It's a differentiator, which will increase the likelihood of gaining new clients and growing assets. There's also a stat that says 62% of clients would leave their advisor for another advisor who could talk about it and understand it.
Yeah.
So
I'm going to ask you a question. When you talk to clients, like how often do you have to talk them out of crypto right now?
None.
Because are most of your clients 50 plus?
Yeah. The average age is 58.
Yeah.
But our mandate is to maintain a lifestyle because people don't come here to get rich overnight.
Yeah.
They don't come here to build their businesses. They're usually liquidating businesses or transitioning businesses. And they're like, they want to have 2 homes and the kids taken care of and good estate planning done. And if they miss out on a 30-40% rate of return on a 1% allocation,
Right.
doesn't really affect them. I think it's the younger people that I see that they do something on the side. Oh, I have this Coinbase account. It was 10,000. Now it's 2.
Yeah.
I mean, we look at it as it should just be part of the annual review. How much cash reserves do you have? What life insurance do you have? Who are the beneficiaries? Who's the carrier?
Right.
Do you own real estate?
Yep.
Do you own crypto?
Yep. Correct.
It's
Right. And most of our clients do not because, again, I think they don't understand what the purpose is and, again, how does it make things better for them by owning it.
Yeah.
And that comes down to, hey, we have an opportunity to really keep up with inflation if this thing works out well, right? By having a small allocation here. And so that I see both sides of it. I'm not sitting in a meeting right now going, have you considered crypto inside your portfolio? Mm-hmm. Now, if they come in and say, hey, I'd like to do this crypto thing, or I'm looking for something crazy to invest in with like $100,000, then I'd send them to Robert. I'd go, hey, go see Robert. Robert's got a fund. I don't get a cut of it. It's between you and him. And drop some money in, and he'll run his magic, and you'll have $1 million. Kidding.
I mean, I go back to modern portfolio theory again. If you believe in a diversified portfolio, there's things within the portfolio that you don't like.
Right.
That's just part of the theory.
No, that's very true.
And
That's
so
very true. But first, you have to overcome that this is an asset class and it should be included. Mm-hmm. That's what you have to overcome.
ETF. Well, I mean, that certainly helps, the ETF approval, but also just like the narrative that you hear in the media about, like, you know, if they're following the news around Congress is thinking about regulation or lack thereof, you know, oddly enough, you know, the numbers say that crypto within Congress is not a partisan issue.
Exactly.
It is a generational issue.
Right.
And the people leading these committees and, you know, leading the different caucuses are on the older side, and they just generally don't want to see it move forward.
But it's actually,
because
it actually is a bipartisan issue. It just depends on, you know, what's his name? Ted Cruz wants Texas to be the Bitcoin capital of the world, and hates a CBDC. And,
right.
On the other side, Elizabeth Warren loves a CBDC so she can see what's going on with everybody, and hates Bitcoin. So they're on different sides of the fence, but they see it.
Yeah,
and they're very clear on it. I was just at a conference and spoke with Senator Lummis, and she's obviously very pro crypto, and it's great to see that. She points out that more and more Congress people are wanting to get educated on the asset class, which is helpful for all of us.
Mm-hmm.
Do you think that people inside the government are still consider Bitcoin a threat to the U.S. dollar in some way?
I don't,
because I haven't seen as much of that lately.
I don't really see Bitcoin as being a threat to how we transact, because it's not really a transact.
The debate has
asset.
The debate is more focused on a CBDC versus a stable coin,
right?
And which
explain CBDC,
central bank digital currency, which is essentially a digital dollar.
A crypto run by government.
Exactly, provided by the government. So I think in the early days, there was more people in favor of CBDC. Since the thing in Canada with the trucker strike, I think that's shifted to where a stable coin is more in favor. And a stable coin is really, it's not backed or issued by the government. It's private organizations. But it's what's good is because there was a situation before with the algorithmic stable coins, which crashed and burned as they should have. Stable coins are backed by U.S. treasuries, and so they are essentially made whole or guaranteed, you know, with U.S. government issued products like treasuries.
If you want to see a good business, become a stablecoin provider.
That's right.
Make some serious money.
Yeah, particularly with interest rates at 5.5%.
Because they get all the interest.
Yeah.
Oh wow.
Yeah, your eyes just lit up.
Yeah, well, I was just
Like
about to say,
Apple.
why would anybody buy a stable coin when
The stablecoin doesn't move the issuer.
Oh,
Right.
I know, but why would a consumer purchase a stablecoin now when you can buy?
Because they're going to stay inside that ecosystem like Apple or something like that, and maybe use it to buy things, and
Got it.
now they're capturing that.
Because if you're within a stablecoin, I mean, I think the IRS needs to update this, but if you sell a stablecoin into dollars, that's a taxable transaction.
Yeah.
It probably shouldn't be, because it, in theory, isn't moving.
Right.
So you could use a stablecoin to buy things, but if you have crypto and you go to the store to buy a coffee, you don't want a taxable transaction, so you could buy something that is taxable.
Right, exactly.
Which is presently how
That's how it works.
Yeah.
So it helps you stay in that universe. You're never going to pull out of a
That's right.
out of a Bitcoin and go to your money market at 5%. Those are two different things.
Franklin Templeton has a money market now that's tokenized.
Yeah.
Which is pretty cool.
Interesting.
300 million in assets or something.
Oh, really? I didn't realize I'd gotten that big.
I think it's that big.
Wow.
Yeah.
Okay. Very cool.
Sorry, my mind is just running 100 miles an hour.
It's all
like,
education.
It's like a whole new world, basically, and that's why you should probably have 1%.
You
Is that
know,
an allocation?
you know, if anything, having a small allocation gets you curious because you also want to care about learning it.
What's happening?
Because you're literally invested.
Yeah.
It maybe makes you kind of do more homework.
Right.
In Bitcoin, again, not necessarily for this podcast, but like the giant overall opportunity is the blockchain.
Tokenization.
That's right. Which is a whole episode into itself.
Yeah. Yeah.
Yeah. The friend I was talking with yesterday, he works at a basically a financial services company here in Atlanta, and one of their departments is working on figuring out tokenization and how they tokenize their bond fund, not bond funds, but their private funds, and just
like private equity
type stuff.
Yeah.
Yeah. And I was like, you know what, you think you understand it, then all of a sudden we get regulations and it could throw it for a loop. In theory, you kind of model it after, but I was kind of went to the court thing with him, and it was like, if somebody ends up in court and they have a tokenized fund, like how is the court going to deal with that? Like the court, first of all, you got to find a judge that understands it.
Yeah.
So there's this, we're super early.
Yeah.
And there's going to be bumps on the road, and obviously there's risk here, but I believe you're getting paid for the risk. So
yeah, for sure. Well, it's going to be interesting to see. Like I said, I have not met personally with advisors that are building out digital asset portfolios. Like I said, the only ones I've talked with are more West Coast based, or not talked with, but heard about, or more West Coast based through Michael Kitces and his podcast. But it's definitely coming. I just have a hard time. I was trying to explain it to somebody recently. I said, the ETFs, I had no problem being first. Like in 2004, we had all ETF portfolios. I said, in this case, I'm a little more hesitant to be first. And I don't know it's because if it's like the new world or,
but you're not first. That's part of the argument. The part of the argument of buying it now is get in front of the wave, ride the wave.
Yeah.
When it gets think of this as like the current state is like VC or private equity.
Right.
And then those companies go public and those people are either getting out or they're majorly riding the wave.
True.
It's the same sort of thought process.
This is potentially the first time in at least modern history where an average consumer has the ability to front run a trade against large organizations.
Very true.
Well, that's exactly. And we look at it very similarly in the sense of democratization, in where this is like the regular investor's opportunity to kind of get private equity access presently. Now, when the spot Bitcoin ETF ultimately, hopefully, is approved, all that obviously changes.
Yeah.
And then hopefully you're riding the wave.
Well, even then, I mean, there's going to be a lot of retail investors certainly on the spot spot ETF. I go back to, we had a person pass through here recently that had all their 100% of their investments, which was a sizable amount, in leveraged QQQ, so 3x QQQ.
Wow.
For the last 10 years.
Whoa.
Did pretty well, actually.
Well, if you're their fiduciary,
but they didn't sell. Well, but even 2022 is still sitting on 6-digit gains after.
But does that work? I thought it's a day trade. After that, it starts working against you.
When you back test it, it is so weird. Like you're like, wait, what? It's like it's just. It is. It's like a daily. It's supposed to be a daily reset,
yes,
right?
Correct.
But it actually worked out. If he had done like the S&P or whatever, it wouldn't have. It was just because the volatility of the NASDAQ. It's luck is honestly what it comes down to. It's just luck.
Wow.
But he had no idea. He's like, I just bought this thing. It's just done really well. Right. So it kind of goes back to, I feel like the same way with, you have to understand what you're buying. And so I'd say anybody who's listening who's thinking about, I'll buy that when it comes out. You need to understand what Bitcoin is. Go here, go here to DACFP, take the course.
That's right.
Understand what's happening, because you just don't want to get lucky. You want to have some education behind the strategy and what is it you're doing. I remember Don walking around your conference. It was called the Inside ETFs back in the day. I think the year was 2009. And people were like, I don't understand. I bought this, the leverage or this 2X Dow ETF, and it was inversed and the market was down. I should have made money. And I'm walking around going, nobody reads the prospectus. Like, you guys get paid to read prospectuses, And it basically says that it resets daily.
Yeah. It's also the case. Yeah. So funny story. When I was at ETF.com, I owned a product called USO, which is an oil ETF. And I mean, literally bought the low and like was selling it at the high, and I'm like, why am I not making nearly as much money as what's happening in the actual spot?
Yeah.
So Matt Hogan, who was our global head of editorial, did a blog, don't buy USO, buy USL, which goes across the 12-month futures.
Yeah.
And that not exactly, but does a much better job of mimicking the price of spot oil.
Because you're not actually buying oil, is Don's point.
Exactly. And
you're buying
getting
a
caught
futures
in the
contract.
roll. Exactly. You're getting caught in the roll.
And there's this whole thing called contango and backwardation.
Well, backwardation is good.
That is good, yes. But
it's mainly in contango, and yeah, you gotta get educated is the bottom line. 100%.
You got to understand it, or your advisor has to understand it. And I walk around conferences, every conference, not as much at the Schwab one. I've met some really smart people up in Philly this last few weeks, but yeah, in the past, I've just been like, oh my gosh, where do these people come from?
And I remember back then when people would look me straight in the eye and say, ETFs, no chance, never gonna work.
No.
Mutual funds own the day.
Yeah.
You're out of your mind.
Exactly.
And it's somewhat similar now in the world of not as much now, but when I started in 2018 in the crypto space, it felt similar, where people are looking at you and saying the same thing, and I'm hopeful that they're wrong again.
So use this moment for a little education for myself. So January 10th comes along, and the SEC gives them a green light. I don't know, gives them all 12 or whatever. Pick your number. That's not the day that they launch. That's the approval date. And then at some point in the future, they can choose to launch.
Yeah.
Is it just whoever can get out the door fastest?
So that's part of it. I've heard that those that are, very established, i.e. the BlackRocks of the world, they might be able to launch the next day. I think a lot of that is internal in terms of how quickly they can flip the switch. But most importantly, if it's January 10th, on January 11th, you need to be listening to Rick's podcast, because that'll be the first of this half a dozen that we have interviewed.
Yeah. Okay. So the 11th, 12th, pick a date, whatever the first, there's going to be some volatility.
That's my point.
Right.
Is like, how messy is it going to be?
Likely volatility.
And what negative press comes out of that for the whole process?
CNBC will be running Bitcoin, how to buy Bitcoin ads all day long. So as an advisor, all of a sudden you're in a meeting a week later, and it's still volatile. And somebody was like, please add it to my portfolio. What do you say to them?
Well, first of all, we have model portfolios, and we're not letting clients dictate what's in or not in their in their portfolios.
So it would have to be something they run on their side.
It would be something they would run on the side, unless we have decided that, okay, this has a purpose. It's very different. We need to have conversations with people. Then it might. I don't think I'd ever do a negative consent kind of an email about it, but say, hey, we have this alternate portfolio where we take 1% out of your equity, we put 1% into Bitcoin. If you want to opt in on that, let us know. We'll make that change. I don't have, I would consider that, but we don't let clients dictate what to invest in.
And I'm hopeful
that's why they hire us.
Right, exactly.
Sure, that's fair.
I'm hopeful it follows a similar path to what happened with ETFs, because if you remember way back when ETFs were in their infancy, the knock was exactly to your point. Well, what happens when there's a market correction? Are these things just going to spreads are going to get super wide and people are going to get picked off and this, that, and the other thing? And then when that ultimately happened, they worked pretty much flawlessly.
Actually, on the bond ETFs, they were setting the price
exactly
versus the actual bonds themselves.
That's right. Exactly. And hopefully that the same thing happens with a spot Bitcoin ETF. Hopefully it's similar.
There's in ETF world, there's a lot of junk, and there's just a lot of expensive things that have their marketing gimmicks, marketing tools. I'm a big fan of the good old tried and true,
SPY,
not even SPY, because of the cash drag, but like VOO, IVV, right? But just your core asset classes. Now we do use, for us, this was a huge leap for me several years ago, but we started using COWZ, which is basically, we looked at it as, okay, value is overpriced. Well, the value funds themselves are underpriced, but dividend strategies are overpriced.
Gotcha.
So basically, they look at free cash flow. So companies that have the most free cash flow get added. It resets every 3 months. That's an active strategy. Done well. But my point is there's a lot of complexity, and I see that maybe the SEC dials some of that back with after Bitcoin gets spot ETF gets launched. Like, what else are they going to approve? Is Dogecoin in 3 years going to have its own ETF?
Ethereum.
That makes sense. Yes, that makes sense.
Until the SEC, either we have a different chairman and they kind of clean up their crypto agenda.
2026.
Yes. Vote correctly next election. I'll say that right now.
Purely a crypto line.
Yes.
Are you going to have like one of those charts that tells you who to vote for based on?
I've thought about being that hard line about it. I don't care what side of the aisle you're on. But it's just, it's an important issue to me. And like, but the whole Ethereum thing, like, I'm just not convinced that they're out of the woods yet.
Oh, you think they'll be sucked back in?
I think that the SEC has one more lawsuit in it, one more big lawsuit in them, and I think it's against consensus.
Okay.
And Joe Lubin, and I think Vitalik gets wrapped up in it too. So the guy that started, is it a 50-50 shot?
Do they have $200 million in 3 years?
They have a lot of Ethereum, so they can. So okay. Yes, they have the money.
They have the money to defend themselves. So for those who haven't been following, basically in the Ethereum case, they spent over $200 million defending themselves. Ultimately, you could say they won, I guess.
Yeah, but to be clear, this SEC will not be the one that sues Consensus. I think a Republican administration with a new head is the one that sues them.
Interesting.
Hester Peirce. I didn't say that.
That would be the ultimate mic drop for her.
Right.
There's also, keep in mind, you talking about Bitcoin, Ethereum. There's also products like BITW from Bitwise, which is like the S&P 500 of crypto, and that's an OTC listed security. So people can buy that right now if they want.
Yeah.
So there's
and that's on the actual underlying asset, correct?
They deal with custody.
Yeah, it's market cap weighted. It's primarily Bitcoin and Ethereum, but there's 8 others in it, and it can be. I think it's market cap weighted, but I think they have the ability to like take something out. So, for example, they took out XRP when that whole lawsuit happened, but then on the appeal, when they when the
judge
ruled in favor of XRP on the certain issue, I think they put it back in.
Interesting.
Now, how does that set up? Can you buy BITW on any exchange?
So, because I bought it through Schwab.
It's not it's an ETF.
It's an OTC listed security.
So not true ETF.
Right. So
it's kind of like buying a fund,
so it has the
don't you have to be accredited to buy that one?
Nope.
No. Okay.
Nope. But it's only on certain platforms. Like I believe it's on Fidelity. It's definitely on Schwab. I don't know if it's like I don't think it's on like Ameriprise.
Didn't you have to used to buy it through
yes,
it was trust?
It was a private
application,
right?
Yeah,
but now it's an OTC listed security.
Okay.
So, question about the Bitcoin ETF: Have any of you looked at the applications and what their fees structure are going to be?
I haven't.
I think isn't it like in the 50 to 75 bips?
Yeah.
Is that?
I haven't looked at it.
I think it's in that range.
That would be super competitive because right now BITW is what nearly.
No, you're thinking of GBTC, which is over 2%. Yeah, it's definitely
okay.
There's going to be fee compression for sure.
Yeah. Well, if you got 12 applicants and even half of them get approved, you'd have to have someone going. Mm-hmm. You all own the same thing. You'd have to have fee compression, you would think.
And that's what's going to be interesting about the interviews that Rick does is how are you going to differentiate yourself?
Yeah.
Like there's custodians, there's fees. What else is there? I think going to differ. It's kind of like gold. There's several different. IAU, GLD. There's one from Granite Shares.
I just think. They're all regulated, but it's kind of like you going to fly Delta Airlines or you going to fly in a Cessna 182. I think I'm taking the Delta in this case.
People who like Kathy Woods are going to buy the ARC one. Obviously, a lot of folks are going to buy BlackRock. You've got Bitwise is like the pure crypto player.
Right.
Then you got Global X, Invesco, Franklin Templeton.
But the BlackRock has probably
Fidelity.
the most ability to lower the price to the lowest point, I would think. Just based off, they're so big. they could even take a loss to create market share in it if they wanted to.
So this doesn't exist in the Bitcoin one, but in a future where in Ethereum or some other crypto is an ETF that is a staking-based system, that's functioning interest. So the question is, will that be passed along, or is that something that the sponsor kind of gets to absorb?
Wasn't that like ETFs today where like they lend out, like that's the dirty little secret on Wall Street? They like lend it out and make money that way. And I'm not like an AP expert.
You lending out people's Bitcoin, that could get nasty.
No, I'm not saying that. I'm just saying in the traditional world. I don't know.
So in say Ethereum gets approved at some point, the fees technically could appear to be lower than the Bitcoin one, because there's no quote unquote interest in the Bitcoin one that the sponsor could be receiving.
Right.
But in the Ethereum one that does exist.
But so what they could do is maybe the issuer could keep the interest and lower the fee.
That's what I'm saying.
Oh, okay.
Yeah. So it'll just be interesting to kind of see how these kind of shake out, over the course of years. It'll take. So,
well, I mean, when the SPY came out, do you remember? I mean, that was a long time ago. It was 1991, right? But what was the fee?
I think.
What was the fee?
Oh, I don't know.
It was probably around 0.5% to 0.75% or something like that. But I remember when IVV, I think, was around 0.15 or 0.25, which is super dirt cheap at the time. But now it's 3 bips.
It's awesome.
So
love it.
The same thing will happen in the crypto world. It'll get cheaper as more players come in.
Mm-hmm.
Again, Bitcoin's just the beginning.
Yeah, no, I definitely see that. And then, you talk with Robert offline and you understand how these different currencies are being used for transactions. Absolutely. And how they make things more efficient. I mean, even to be able to transact and not have to use Swift anymore alone, that's worth a lot of money for a lot of people, because that's time. It saves days.
Right. Yeah, 6 days at 6.5% versus 10 minutes at virtually free cross-border.
Yeah. So there's definitely a lot of purposes for the usage, and I think it comes back to educating people again, which is what you guys are doing good at DACFP. Well, guys, we got to wrap it up here, but thanks for the conversation today. And if you want to learn more about crypto, we'll have a link for that in our show notes. If you want to learn more about Teton Crypto Capital, you can. I guess we should have a link for that in our show notes as well. They can reach out to Robert directly. Thanks for listening. See you guys next time.
Sounds good. Thank you.
Thanks for listening to a Wiser Retirement podcast. We hope you enjoyed today's episode. Make sure to subscribe wherever you're listening. That way you don't miss any new episodes. We'd also appreciate if you could leave a rating and review. If you have any questions about anything that was discussed today, head to wiserinvestor.com and reach out. This episode was produced and edited by Ken Hoadley.